The broadcast is now starting. All attendees are in listen-only mode.
Good morning, good afternoon, everyone around the world. How's everyone is doing this beautiful Friday afternoon? So, how does everyone is doing today, guys? At first, I would like you guys to know my name is Eric, Eric Morera to be precisely. I'm going to be presenting the seminar about the world indices today. A little inconvenience at the beginning. It is an amazing turnout. It's more than honestly a lot of registration today in the last hour, and we have to fully open a lot of more space due to the amount of people in the seminar. So that's a good thing. I mean, because eventually that means that there is a lot of interest about the topic. What is amazing is that this is a seminar that we planned to do since at the beginning of February, all right, when the indices they were at the peak. And it turned out that that's what the title of the seminar. Thank you, Andrew. Thank you, everyone, guys, right there. It's a lot of people, like I say, hard for me to mention everyone, but thank you all for being here today, members or non-members of Elliott Wave Forecast. And like I was saying, we were planning to do this seminar since early February. The indices at that moment, they were still trading at the highest. And the idea of the seminar was that's what the name is come from, which is at the world indices entering into a crash territory. So, all right, better now, right? Because they are already dropping. So let's give it about another 5 minutes so we can start a, a, to allow everyone to join us. It's gonna take about an hour and a half overall. So it's gonna be interesting. And something that I wanna mention to all you guys there, something that I wanna mention about you guys there is that I am different than all you guys in a good way. Not that I'm the superhero or anything. And I want to mention in a way, I'm a human being like all you guys, but I have trained my mind for many years just to look one way. And I do ask you guys for respect during the seminar. When we present our views, they might not agree with your views, but in a civil way, let's disagree in a good way. Uh, I will ask you guys also to let me do the presentations, and I will answer questions at the end of the seminar. Also, I want to mention that we are going to be covering individual stocks or individual instruments that they are not part of the presentation that we're doing. And like I say, at the end of the seminar, it's going to be a question and answer session. But I just want you guys to open your mind. Open your mind. That's the key here. Opening your mind. We, as everybody knows, we are the professional servers. We've been in business for years, and we look at the market as a professionals, right? We are a membership site, everyone knows, and we're gonna provide you guys with views in an open views. I mean, we aren't gonna tell you exactly this is the place or this is the place because we don't know yet, right? But we're gonna give you an overall view to all you guys all for free. And we also have to keep a balance with the people that they are our members and they pay us for our opinion. So it's gonna be great. You guys gonna learn a lot today. You guys, if you guys open your mind and let your mind and let our presentation get into your head, you guys gonna be better traders today. I guarantee you that. Right? I'm gonna put my heart and soul in what I do for a living, and that's all I can say before we start the seminar. So bear with me, interact with me, and you guys gonna have a nice weekend, I guess, at the end, right? I hope so. All right, guys. So we're gonna start is 2:19 in 1 minute. We're gonna start in 1 minute. And like I say, it's gonna take about an hour, an hour and a half. Should be enough. Exactly. That's more important. Exactly. So it's not, but I always do this in my seminars. Exactly, Irona. Exactly. This is just a seminar, right? But as a way of a good karma, in some of these weeks, we do these seminars time for time to time, right? And this what I was planning before the peak of the indices. Thank you, Christopher. Uh, uh, in like I say, we were planning to do these seminars in early February, middle of February, and then the decline happens, and we're gonna cover everything. But all you guys need to open your mind. That's the most important thing. Open your mind, right? Thank you, guys. So a lot. I cannot mention every name. Uh, I cannot mention every day, every single name. Yes, I will, AJ. AJ, I will. All right. A lot of people here. That's good. That's good. I love the live session. As you know, Donor. Donor is a hardcore member of Elliott Wave Forecast. So I love the live session. I love doing this, guys. Okay, guys. Enough with this. Most people here, amazing that we have to open a, a the registration because it wasn't enough. How you doing, Javi? I remember you. How you doing? Thank you, Javi. I remember you from the Spanish side. Yes. All right, guys. So here we go. Let's start these things rolling. Like I say, rules of the seminar. I'm gonna explain my opinion. All you guys want my opinion. If you don't agree with me, don't say it. Take it to your side and do your things. I'm doing this to hurt people. It was planning before the crash, and we have to show it now, even with the crash. So let's not become a contest who's right, who's wrong. Let's be straight and trying to help. I won't say onto the tip everything, but I'm gonna give you peace. That's my goal, right? And I'm gonna show you how to look at the market as a professional trader, which do no hard overreaction to everything. I'm not always right, but I'm more right than wrong, or we are more right than wrong. So that counts overall, right? All right. So the seminar, everybody knows the title already of the seminar. Thank you, Hector. Thank you, everyone. In the seminar, we're gonna cover a lot of things. So the first question that you guys might ask, who are we, right? All right, I create Elliott Wave Forecast in 2005. At that moment, I was trading a fund manager as a fund manager account, and I developed Elliott Wave. I fall in love with Elliott Wave Forecast. Most of you guys have seen that logo. And what it was a dream now is a reality, right? 15 years later. So I fall in love with Elliott Wave, like many of you guys practice Elliott Waves, I guess. And I start on a background. I was born in Cuba. I come to the States around 1990. I lived more of my years here, but I'm a Cuban. I was born in Cuba. In my life, I started mechanic engineer, then electronic and computer. So since I was a kid, I was a person that always, uh, as a kid, I was a person that always uh, got that things with the numbers and the patterns. So that's what I decided to be an engineer, right? And I start trading, and I get to know Elliott Wave. Then I fell in love in Elliott Wave. By nature, I'm a person that I always pay attention to details. And when I get into something, I always try to be the best I can into that field. So I started Elliott Wave and figured out the way. And I have my good moments with Elliott Wave, and I have my bad moments with Elliott Wave, and things of that nature, like everybody else, right? So, like I say, we start in 2005. We were covering at that moment, I believe, around 14 instruments. Then we start growing and growing and growing, and we grow in the process of Elliott Wave. I'm going to explain why, but also we start growing and expanding uh, our views into the world, right? And then everything happens out of the sudden. A lot of hard work. You guys realize, you guys won't believe me. I'm working almost the same amount of hours that I was working when I was only by myself in 2005. And technically, it's a passion for me, right? I do it. Some of you guys that there are no members here don't know that, but the members know that I put the same emphasis, passion, and enthusiasm in my live session. So I do it from my heart, and that's why I believe that I can do it, right? Because I do it from the heart. So in 2010, a broad partner with me, the name is Daoud Batik, and we've been together. Now we are a group of people, of analysts that all together we make about 15. That's why you guys see too many logos, right? And they all hard worker. They all try the best. But most important, we all understand that it is the future what we're forecasting, and we do all understand that nobody get it right 100%. Now, I mentioned earlier that I fall in love with Elliott Wave, right? That's what the name on the site is, Elliott Wave Forecast. I can be calling it, I don't know, Psycho Forecast or another name, but I call it Elliott Wave Forecast because at the moment that I created, I was in love with Elliott Wave. Not that I don't believe in Elliott Wave, I do believe in Elliott Wave, but over the years, and I want you guys to get a sense of how we do things or how hard or how we do operate. We cover about we cover 78 instruments in the regular basis, right? 78 instruments. Plus we keep track of another 30 to 40 to 50 instruments, at least in the weekly basis. So that makes we do 4 days per day in 1 hour, 1 week, 4 hour a day per day in the 78 plus the rest. That makes us that we make about 9,000 charge per week, per month, my bad. So with the time, you develop something else, right? And we have created a lot of rules to the Elliott way that all you guys know. And that's what makes us different than the rest service that you know. Most of the rest service, all due respect, all they do is 1, 2, 3, 4, 5, ABC. They start still looking at the rules of alternations and things of that nature, right? Like if the wave 2 is an ABC, the wave 4 cannot be an ABC. I used to be like that, and I do respect whoever wants to do it that way. The bottom line is the following. Elliott Wave, and this is when I start saying to you guys, open your mind, because I'm going to teach you guys something today that most of you guys don't know. So before I tell you what I like and what we think. So it's going to be a lot of education before we get to the final, but something that is going to help you guys. Like I say, I was the guy that I go and I say, okay, wave 2 was an ABC, wave 4 cannot be an ABC. Then when I saw an ABC in the wave 4, I start tweaking my counts, because the book say that it cannot be the same correction in any way in the 2 and the 4. So with the years, I started getting by Elliott Wave. Why? Like, in an honest way, how many times have you guys seen a clear-cut, beautiful 5 waves? And you guys comes and say, okay, I'm going to sell, I'm going to buy the 3 waves back. And all of a sudden, it goes 3, it goes 4, and it goes 5. And you say, but the books say that because I got 5, I need to get 3. So I'm going to sell it or buy it because the 5, because the trend goes in favor of the trend, and boom, that comes the flat and takes your money. Because of those little things, an example like this, we developed more rules to the Elliott Wave theory. Everybody knows that the base rules of Elliott Waves are that wave 2 cannot pass the beginning of wave 1, that wave 3 cannot be the shortest, and that wave 4 cannot overlap the top of the wave 2. That was created in 1930s, guys. By the way, in Cuba, some places, some part of the theory was created in Cuba, by the way, because the guy used to be an accountant for the sugar mills in Cuba. So that was in 1930. We are 90 years later. We cannot keep believing that you're going to forecast the future with 3 simple rules, and that the buck ends with Elliott Wave. And that's the key. My mind, in thinking outside of the box, say to myself, I cannot put my money, I cannot put my forecast, my work, and my client's money in 3 rules. So around 2009, we start switching into what you guys see now, which is something more complex than Elliott Wave. And that's who we are. Yeah, our name is Elliott Wave Forecast. Yes, we use Elliott Wave, but we use Elliott Wave as a language. And part of the principle, we have combined it with another 16, 18 rules to make it more like in 2020. In other words, we trade and we forecast as computers. In other words, everybody knows that around 1994, small PCs start to take over the world, right? Internet, other stuff happened around that time. With the years, the financial markets, they were part also of the world, right? And everything by human nature, the human, they're trying to get better. And what happened is that they integrate computers to the trading. Yeah, there are still people like me that we do it through the computer, but we're doing it hitting by yourself. That there are big banks, big companies that they use what is named high frequency trader, because people don't realize, and that's part of the human nature, right? Like I said, beginning, I've been trained 3 times to be an engineer in 3 different fields. One of the biggest things that they teach to the engineer is critical thinking. You need to think in the critical way. I'm going to ask you guys, do you guys really believe that an individual in Tennessee, Florida, London, Australia, any part of the world, that individual gonna move the market every millisecond? No. There is, first of all, there is not a speed to react to that order. Second, doesn't have the money to move the market. So somebody, in my view, a group of big people are looking at the market, like I always explain to my clients. They are a bunch of market makers and they fight each other. Sometimes they differ in a view. Sometimes they put more money into one side. But at the end, that's when the truth comes from. A group of individuals, not the crowd, right? So since then, we changed our view of Elliott Wave, and then we starting to look at the principle like to develop in something more to the 20s. Now to the 20s, amazing. It was to the 10, to the 11, now it's to the 20s. It's amazing. So technically, that's why you guys see those blue boxes. And yes, our view not always happen 100%. Why? Because they are done by us human. Maybe we missed it sometimes. Maybe the price doesn't get to where we were. And that's why we in Elliott Wave Forecast, we put a lot of emphasis into concepts like the right side, the blue boxes that you guys seen. Why? Because knowing the right side is gonna save you a lot of money because you don't trade the wrong side, right? And that's who we are overall. That's what I'm gonna say about us. That's who we are. We are an Elliott Wave service with a view of the market that it comes in 2020, not in 1930s. Whoever want to run service based in the three rules, ABC, 1, 2, 3, 4, 5, good. It's a free world. But Elliott Wave Forecast, we operate in 2020, right? So I'm going to give you guys now some insight about things that we do that most people do know, right? And why it makes us that's why that makes us different, right? Now, I hope that everyone knows now who we are. Now, we got here, and this is what we're gonna be covering today, right? This is what we're gonna be covering today. Overall, we're gonna be covering the cycles, which is part of Elliott Wave, in some ways, because I want you guys, like I say several times, open your mind, understand what you know already about Elliott Wave, and then you're gonna see a difference at the end. Yeah, the recording is gonna be sent to participants, I guess. Yeah, and they will be posted in the homepage, break and cherry right there. So we're gonna talk. We use cycles. We use sequence. You're welcome, my friend. We use sequences. We use market dynamics. We don't use any fundamental. That's a given. So we use technical. And with this tool, combined with the rules that we have developed, combined with Elliott Wave, we came out with a forecast, right? So technically, it's a most out to the time view of the market, right? So this is what we're gonna be covering today. At the end is what is next, right? So having said that, this is what a cycle definition is. A cycle is a sequence which runs as an impulse or corrective structure, right? I'm gonna cover everything, AN. Please bear with me. A cycle is a sequence we can run as an impulse or corrective structures. That's part of Elliott Wave. The cycles has a beginning and an end. Cycles have different degrees, which can be shown is gonna be shown in the following slide. Like everything, the same way that everything starts, ends, the cycle starts and ends. And that's the way that we look at the market. Now, these are the degrees of the cycles, right? We have the grand super cycle, the super cycle, the primary, and on and on and on, after the lesser degree, some minor cycles, right? So we use this is pure Elliott Wave. right? Elliott Wave. So we combine these cycles not only in one instrument, but we combine these cycles in one instrument, but in the whole market. Because one important concept that we do in Elliott Wave forecast is this: we believe that the whole market works as a whole. In other words, there is no way in this planet that you're gonna be bullish. Let's put an example: the euro yen, and you're gonna be bearish the euro dollar. That doesn't work, right? Because it doesn't work. It doesn't work like that. There is no way in this planet that you're gonna be bullish the S&P and you're gonna be bearish the FTSE of the Nifty. It doesn't work, right? So in Elliott Wave, we put a lot of emphasis in the cycle, not only on one instrument, but the whole market. And we keep a track of every single instrument up to the moment in the cycles. And we keep a track and we say, okay, this is the cycle in the indices, it's running within the super cycle, whatever, whatever. And that way we come out with the forecast of the market. So cycles, everyone knows what a cycle is at this day, right? You're gonna see at the end how everything's gonna make sense. But everyone understands what a cycle. For example, the S&P, it was running a super cycle degree since 2009. We knew that that cycle was coming to the end in 2020, right? So we knew that the S&P, it was trading within the super cycle, which in the red is part of the grand super cycle, and on and on and on. So that's what definition what cycle is. Now, the sequence. This is something funny, and I can tell you guys what it is and why. A lot of people trade Elliott Wave, correct? And they don't even know what are the sequence of the Elliott Wave, right? Have you, other than members of Elliott Wave forecast, any of you guys there knew about the sequence of Elliott Wave? We have made famous the 3, 7, and 11, right? That most people don't know what we're talking about. So technically, the market, when it's an impulse, it runs in a sequence of 5, 9, 13, 17, 21, 25. Every single impulse in Elliott Wave is 5, 9, 13, 17, 25, 21, 25. Every single correction, an ABC is a 3, a WSY is a 7, a WSYZ is an 11, and on and on and on. That's huge to know. Why? Have you guys seen all the blue boxes of Elliott Wave forecast, right? Everyone there? Have you guys seen our blue boxes, right? That we put to the charts to the members. The blue boxes, right? Okay, so that's great. The blue boxes is this sequence: 3, 7, 11, 15, 23, 27. Right? You remember, Christopher, right? When we start using the blue boxes. So technically, the blue boxes is 3, 7, 11, 15, 23, 27. Now, what makes us different in that regard? We figured it out that and let's open the mind again to get back 90 years ago. What Mr. Elliott did was fantastic. But the guy didn't have what we have today. So, critical thinking. If the guy that developed the theory 90 years ago didn't have what I have today, that I can have 20 screens in my house, I can have and put every single instrument one on top of the other. When the person that developed the theory developed everything based in the Dow Jones Industrial in one instrument. What he noticed is a beautiful mind. But why, if I have more tools than him, I have to think like him, and I have to operate like him. No, I can be better than him. Because not because I'm smarter than him, it's because I have more tools than him. Does that make sense? So we develop and we figured it out in Elliott Wave Forecast that the best way to trade the market is knowing the right side and always entering the market with the right side in 3, 7, and 11. Why? Because by nature, when the market does 5 weeks and get back in 3, the moment that it reaches the blue box in 3, there is an 80%, 75, 85% chance that at least a bounce you're gonna get. At least a bounce you're gonna get. Why? Because by nature, if the current right side give up after 3, it's going to bounce, and then it's gonna kill the right side. But in that bounce, you cover yourself. And that bounce, you cover yourself. And that's the advantage that you have when you know the sequence. I'm going to explain everything in detail down the road. But that's the way that we do operate. Yes, we provide as an educational, we provide ideas to members. And those ideas, there is no single one. We identify the sequence in every single time frame, including 1 minute. But we don't sell the sequence in 1 minute. We sell the sequence. Technically, we provide our day in 1 hour, 4 hour, dailies, and weekly, right? So you see our performance here. It's just based in that sequence. There is no a single trade against the right side or no entering in the moment of the sequence. And that's how we do things different than the rest. That they buy, a lot of traders, they buy into the bounce. They sell into the bounce. A lot of traders pick the top. Listen, guys, nobody in this world is being more defined that 2020 is going to end 2009. We knew that, but we didn't get the pick right. Because you know why? Because we don't pick the top. We get a run at the top, always. Because by sequence, we don't trade against the right side. So eventually, well, the way that we operate is, as a professional traders is, and this is a reality, Terry, AC, Christopher, all you guys there, AN, all you guys that interacted with me. Most of the traders that they pick the top, they do 2 things. They get it right once, but they get it wrong 9. The whole planet has been selling the S&P since 2010. We've been telling members since 2010, keep buying. And guess what? The day before the peak, I was telling members, buy. And I don't need to hire that. I was saying 34, 37. It did 33.98, but I say 34 long ago. So I get it wrong at the end, but I get it right for 9 years, for 10 years, 11 years. That's how professionals are. Now you reset and you wait for the next sequence. It's a different way of seeing the market. Now, that's one thing that most people do. They're trying to pick the top instead of ride the train. Second, after the fact, when the top happened, they're going to come and say, look, you're missing the sale. Happy so. I missed the top. I didn't pick top. But in the decline, I know in my sequence, and I'm going to show you, I can sell within the new sequence that create to the downside. So the sequence is very important to be professional traders, Terry. Elliott Wave is, the market is a constant adjustment. Very good, AN, very good. And that's what professional traders understand, that you don't make it, you just adjust. You understand what I mean, AN? You don't make it. Right? This is something. Look, I'm gonna share this comment for a good friend of mine that I saw the report I'm happy to have you back in Elliott Wave Forecast. You know, I enjoy it when you were in my live session. Look what he said, right? Now, I got another question about sequence. What tell you what the sequence is started on when? No, we create something that is a distribution system, right? And that distribution system is something that is based in volume, like you say, against price. Very good. We don't follow news. Please don't talk to me about news today. I respect the virus. It's terrible. I don't want that things to happen to everyone. But in my view, the market is not dropping because of the virus. Like I say, I see things in two ways, black and white, winning or misery. I don't like the in between. So if I'm going to be a technical trader, I'm a technical trader. And I knew that the market is going to trip. Now, the people that make the market, AJ, right? What they happen is they justify terrible news, not in the bad way, right? But these new things, these events that happen in the world every now and then, they create issue in the market and switch the dynamic. But you doing what we do, you capable to listen. We did a lot of blogs over the last 2 years, trying to figure it out. What was the reason for the drop, right? And thank you, Nasser. You can go to the home chat. They will help you there. Tell them that I sent you there. They're going to kill me, but tell them that I sent you there. So I always told the clients, and I did blogs because trying to figure out what is going to happen in 2020. I can show you the blogs because I knew that the price and the time agreed in 2009 ended. I thought that it was because the U.S. elections in November, many reasons, right? The impeachment. We didn't know what is going to happen, but I know it's going to happen. And I know that in the near future, something is going to happen to turn the things around. And you're going to know at the end. I don't know what's going to happen. Don't ask me. I don't waste my time in that. I read the chart, and that's what we do. So the sequence are very important to locate the right side and to know when you going to enter the market, the sequence. So keep in mind this number 3, 7, 11, 15, 27. Now, another thing that we use over here is the dynamics. This is all our own creation, right? You're never going to hear nobody talk about market dynamics, right? And this is huge, not only to trade the present, to forecast the future, right? In our view, there are three main elements in the market. The indices as the indices, right? The indices, the ETF, the stocks, everything. That part of the market. There is everything related to the dollar, commodity against the dollar pairs, all the stuff. And there is the yen, which the yen rule the market. For me, I always look at this way. There are three main things that relate the market: the yen, the dollar, and the indices. That's why we create this, and we notice for years about this, which is the market dynamics. For all, there are four main dynamic. The yen dynamic is what you guys saw over the last 3 or 4 weeks, which is that the dollar yen trade lower. The yen is strong, right? They cannot happen all together. The yen gets strong. The yen pairs trade lower. The indices trade lower, and the dollar is the one that gets relative sideways, right? Now, the second dynamic is the one that we have from 2009 all the way to 2015. It's an index dynamic. The indices rule the market. In the yen dynamic, the yen ruled the market. The yen got strong and it killed everyone. including the dollar. In the second dynamic, the indices is the index dynamic. That dynamic is going to run like the index is straight higher, get back to 2009 to 2015. The yen pairs rip higher because the dollar, because the yen get weak. And consequently, the dollar gets relative sideways and the dollar pairs goes relative sideways at that stage. And then in that dynamic is the most, the dynamic that happened the less is the yen dynamic. Because I want you guys to understand this, and please don't let nobody tell you otherwise. The index is always, always, always going to be bullish. 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 I used to joke to my members and say, if I had the power, I'd delete the selling side of the indices. Because guys, critical thinking back again. 5,000 years ago, we used to live in the woods, right? Think about that. 2,000 years ago, we were doing better. We started in 1492, this side of the world was discovered. So there is progress, right? In 1930s, the car couldn't ride more than 40 miles an hour. In the flights, I mean, there were, if you want to fly to Europe, you better go by the ocean. Don't go in the flight, right? So nowadays, look at where we are. That thing is called progress, and nothing reflects the progress of human nature better than the indices. So be a bear in this market, in my humble opinion, is being a loser, because technically you're going against your own human nature. That they do correction? Absolutely, they do correction. A good trader knows when the correction is coming, and when the correction is taking place, he looks for opportunity to go higher and to buy the dips, because that's the way. Now, you don't want to get killed yourself, right? Everybody knows that at the end that we were ending 2009. So you got to be careful, and you have to say 2018 is the line in the sand, December 2018. If it breaks lower, that means that the cycle ended. But in that period, you don't know, you have to trade accordingly. So it's better to be a bull than being a bear, because the bull goes with the human nature, with the trend always bail you out. And the trend of the index is always going to be bullish. Yeah, that they're going to be cycle degree correction, super cycle correction. That's part of the market. But the sequence is always to the outside. You never seen an index? Have you guys seen an index that is trending to the downside? Please let me know, because I don't. I never seen an index trending in the yearly cycle to the downside. Everyone agree with me? I don't follow such a things as a bear market or bullish market or bull market. For me, there is only one market. It's called a bull market, AJ. Now, for me, everything that put back is a correction. It's a temporary pullback against the main trend. You understand what I mean? That's the way I see it. Like I say, open your mind, guys, and go ahead. That's the way that we operate, AJ, in Elliott Wave Forecast. Now, then we have the dollar dynamic, in which when the dollar rally, the indices, the dollar dynamic goes in two ways, lower and higher. When the yen pairs, and then in this dynamic, the dollar pairs goes with the yen pairs together. That dynamic, the dollar yen gets sideways, and then the indices get sideways. That's what's happening over the last few days in the indices. Have you ever think, or it crossed your mind, why the dollar yen has rallied since March the 9th and the indices are sitting at the lows? Have you ever think about it? No, right? It's because the market is trading ruled by the dollar. So the indices needs to get like they've been sitting at the lows right there in a sideways move. And then this is a very interesting one coming in, which is what we call the fixed dynamic. And this dynamic, the indices trade higher, the yen pairs higher, the US dollar pairs trade higher, then the dollar trade lower, and the dollar yen continue to be sideways. So technically, the indices rule, but everything, that's when you see the dollar yen, the euro yen trading together with the euro dollar. And then the dollar yen gets sideways. That's what is called the fixed dynamic in our book. You guys won't see this in anywhere in this planet. I guarantee you, anywhere. Copyright this, nothing. It's or. This is not in the book of Elliott Wave, in any video, nothing. And this is one of the first time that we make it public. Our members know about it, but this is how the market works. So, like I said at the beginning, I do not follow any fundamental, right? For me, fundamentals analysis, like I say, is how you measure and you value things. I don't get it. I get it that there are people, and I respect whoever trade only based on this. Like I say, for me, it's winning or misery, right or wrong, black or white. I cannot be this and this and this. I respect the other side, but I'm this, right? So the technical analysis is more what we do, that because eventually you can talk to the fundamental guy and they can say, no, the indices will do a correction, whatever, because whatever. I don't even know what inflation is. Swear to God. I got an idea, but I don't know. I cannot give you a strong definition about it, right? So if I'm able to create a service that is being in business, it's going to be 16 years or 15 years, my bad. And we do 8,000 and 9,000 charge per month. We have a lot of loyal members, and we stay in business without knowing fundamental. That means that is what it is. It's like I always say, and I don't know if you guys think about what being defined mean in life. Have you ever, guys, think about it? What means define means in life? For example, let's say AJ. AJ is a trader, but he's a trader that use critical thinking. AJ, and he's a guy that knows about the rules of probability, right? I can tell you this for the fact. If AJ goes and sit in his balcony, right? Look outside and say, it's 9:30. I always say this example. It's 9:30 a.m. today. The market opened in New York. If the first car that passed through my house is a white car, I don't do nothing. It's a black car, I don't do nothing. If it passes, the moment that the first green car passed by my house, I'm gonna buy the market in a simple way. If it's a red car, I'm gonna sell the market. Every day, I'm gonna put my entry, I'm gonna put my stop, the same, 30 points. 10 points a stop, and I'm gonna put my limit 30 points in the S&P. Let's say it comes tomorrow, 9:30 in the morning. It comes the yellow card, don't do nothing. It comes the white, don't do nothing. It comes the red, boop, I sell the market. Good. Either you get to my limit with 30 points, or you take my 10-point stop. Good. Let's say that day you win. I was gonna be winning first. I believe in the winning side. So you're gonna put win. Next day, it comes boom, 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 and it comes the green card. You buy. You win. Next day. But keep in mind, you already have a criteria set, either this or this. You don't have an in between. It's either this or this, with a ratio of 3-1. Very important. Money management. So you comes the third day, and guess what? You win again. And guess what, guys? If you lose 7 days in a row after, you don't lose after all. Because with the ratio and the strong criteria to enter, all you need is 3 wins out of 10 and a 3-to-1 ratio to be profitable. So that's why I decided, being a math guy, to say, I'm going to be a technical trader. I don't care about the other. I respect it, but I don't care. I cannot be both sides of the question. Does that make sense? Have you ever guys thought about it? Get a calculator, do the math, and you're going to see what am I saying. Right? So that's the way I see it. Now, before we jump, I'm going to show you guys, because I need to explain all this, Lynn, so you understand me at the end. Otherwise, you won't understand me when I say what I want. Now, the word indices, before and now, very simple. I'm going to show you here what I already told you guys, which is the sequences, the cycles, and the correlation and the dynamics. And I'm going to show you how we saw it 3 months ago and how we see it now. Right? You follow me, right? Everyone. So this is how we saw the things before. For example, this is Aussie yen. It's a yen cross, right? And Aussie yen, it was very instrumental when it took the lows here of June 2016 back in 2018 to tell you that the peak in the indices was knocking on the door, right? And I want to explain to you guys why. Simple. Remember, 3, 7, and 11, right? This is the super cycle degree in Aussie yen. How many swing do you guys see over here? 1, 2, 3. Correct? Lynn, AJ, Christopher, everyone. 3 swing, right? Now you guys can interact with me. Right? 3 swing there. Aussie yen makes 4. As far as Aussie yen was about this level, the indices, like the S&P here, it was possible to extend all he wants because it is a wave tree. This is a quarterly chart. It's a wave tree taking place from 2009. So as far as Aussie yen was above this level, you don't pick the top in the indices. You keep riding the trend. Now, the moment define swing, I already told you already what a swing is. No, you can see it in 1 minute. It's the same, AN. So when we saw back in the beginning of last year, right here, that the Aussie yen to this peak, we knew at that moment that the yen crosses, they were telling us, don't be so greedy to the outside of the indices. And that's what it was telling us, that it was a bottom, a moment in which they're gonna drop. Why? Because over here, the Aussie yen has, in a super cycle degree, 1, 2, 3, 4, and 5. So Aussie yen, but then I knew that it was a moment that is gonna trade over here. And I know that that trading over here is gonna pull the indices lower because it's too much yen strength. Everyone follow me? So before this decline, if we were doing this seminar in February the 20, not the 20 was the peak, February the 10th, I will be telling you guys that things. And I was showing you what we were showing to the clients, which is that these indices, they were about to peak because the Aussie yen was calling this. Now, some of you guys don't realize it because most of the traders in this planet, They just look at one instrument. I'm going to trade ES. That's it. The buck start and ends with the ES, SPY. I'm going to trade S&P. I'm going to trade NASDAQ. I'm going to trade Apple. No. You need to trade the market, right? For example, look at this chart right here that I'm going to show you guys of the S&P. And you guys going to see the thinking, right? And I'm going to show you the future. This is the past. I'm going to show you the future that we want to do it today. For example, you look at this chart of the S&P, right? And you go over here and let me see, Eric, right here. This is the SPY. Because I want you guys to understand the whole concept. No, I'm going to show you now. This is SPY. It's a chart of April of 2019. We knew that sooner, later, in the spring, in the summer, in the fall of 2020, the market will do this. Because you know why? Because the simple rule that is showing here, which is the Aussie yen, the moment that Aussie yen do this, we knew that it was a matter of time that the indices peak. Because wherever goes the indices goes the yen. And wherever goes the yen goes the indices, right? Now, we in Elliott Wave Forecast have a concept, which is everybody knows correlation, right? Everyone heard about the correlation. And everyone heard about saying, yeah, this is true. They trade 98% together, 70% together, whatever. That charge that people does and the broker does. We developed something that is called first degree and second degree. Most people only know about the first degree. And the first degree is when the instrument agreed in swing and in direction. The second degree is when they agreed in swing direction, but no in overall direction. Now, this is Aussie yen. This is the S&P. Right? You're gonna see it now. It's evident, right? Same law, keep going higher, up to here. Like I say, this is an index dynamic up to around 214, 1014, 1015, right? They went in the first degree direction. They agreed in direction and in swing direction. Everyone see that, right? Now, then what happened? Aussie yen declined, the S&P declined. They rallied together here, right? They rallied together here, they rallied together there, and then they dip in 3 weeks together. We bought the S&P over here. But I knew at that stage that when they break this low over here, that Aussie yen is going to bounce, but at the end, they're going to get together again. And that's why you see the chart, this chart of the S&P that I just showed you guys. Because the moment that the yen took this low, we knew that. We also knew the idea about the SEC yen, beautiful chart also, which is telling you that, what is my SEC yen chart? It's telling you they are the same thing, which is that the market, it has a bearish sequence right here. That's the SEC yen, the same cycle, 2014. Since 2014, the market has been driven by the positive dollar dynamic. That's why you see the yen crosses not cashing out with the indices. And we've been laboring that way. Right, AJ? So the SEC yen also was another one that it took these lows. So it was easy without nothing, anything in the future. Exactly, Hector. Have you been a member? I think you got it right. So eventually, without nothing about fundamental, we knew that the yen is going to get strong this year. And that's going to drop the indices, right? So eventually, we were showing that and Another one that was very interesting was the IBEX from Spain. Most of you guys never heard about the IBEX other than Javi, right? Most of you guys never heard about the IBEX. It's an index in which the moment that it took the 2009 low in 2012, we knew that there was a moment that the crash is coming. And that's why we label the IBEX also. These are charts, guys, from February of 2015. The point that I'm trying to make is how our system knew that it was close, that at any moment it's gonna happen. Yes, and I say in a straight face, I was telling, and I'm never gonna pick a top. Look, that's the IBEX. The IBEX now is here. No, my bad. The IBEX is around these areas, right? Because eventually, and this is the S&P back in February, right there. Look, so nothing had happened that we weren't expecting. The only thing is that this last swing, it never happened. Why? Because when you look at the yen crosses, like the SEC yen, honestly, it did a very shallow connector. And our thinking was, this is a 2-year cycle. I was expecting a little bit higher here. And I was expecting the S&P to reach around 36, to be honest. 34 to 36, but 36 and change was done at the target, right? Something like that, the perfect target. It never happened. But the market was giving you the warnings in our system. So that was the indices before. Now, let's move on to what everyone knows and everyone wants to know now. Like I say, Aussie yen, SEC yen, and the IBEX and so way, they gave you the hint because they create a bearish sequence, AJ, within the super cycle degree. And the market needs to fix. And the fix was that the 7th swing in the index, in the yen crosses, is going to be, no matter what, is going to be the pullback in the indices. Now, this is what a sequence looks like. For example, this is what a sequence looks like. I want you guys now to understand the colors right here. When you see these grays, that means super cycle. When you see the blue, it's either the blue boxes or it is, for example, or it is a grand super cycle. In other words, for example, this is the Dow Jones, the real estate market. This is a grand super cycle with a correction, and this is a super cycle. So I make these two colors so your eyes can be able to understand what I'm saying into what we entering now. So, for example, I was in the SEC yen. This is what a sequence looks like. These are no Elliott Wave labels. These were Elliott Wave labels. This is the S&P together. This chart, guys, this chart, you want to know what day was made? This chart was made back in, I'll give you the name, the day. This chart was made, the presidential one. This chart was made over here, the presidential one. That chart was made in September 19, 2019. 2019. Look over there. What's the last time I touched that chart, AM? Last time I touched that chart. And it's in there. So the printing that you guys seeing here is from that time. Look at the peak. Look at what the market did. So the market is doing what it was supposed to be doing. And the point to be made is had nothing to do with the virus. The virus accelerates the decline. It's the thing that, boom, makes it happen. But it was due. It was easy to see it do. And I'm going to tell you what is the future. Don't go wrong. I mean, don't go away. I'm going to tell you what is the future then. So we were about the SEC yen and the sequences. Now, like I say, The market, this is a corrective sequence. Why? Because right here there is overlap. Right here there is overlap. It's a corrective sequence, right? In Elliott Wave. That's what in Elliott Wave is called, in my view, a WXY, right? And a WXY in Elliott Wave is something that it looks, let me see, I have it here, something that it looks like that, right? That's a WXY in Elliott Wave, or a 7 sequence or 7 swing sequence, right? That's what it is, right? Now, I want you guys to understand what I'm going to explain now. The sequence. 1, 2, 3. In Elliott Wave, you label it A, B, and C, and you put the W. 1, 2, 3 makes the W. 3 backs make the X or a 4. And then 5, 6, and 7. The way the market works is it runs sequences. Now, that was the labeling in Elliott Wave, right? Now is the labeling with sequence, in which there are 3 degrees: the blue, the red, and the black. 3 degrees: the blue, the red, and the black. 3 degrees: the blue, the red, and the black, right? Now, I want you guys to look at me and listen and understand what am I saying. For example, I'm going to remove this box, gonna remove this box, I'm going to remove this box, and I'm going to remove this box. The way the market works, no matter what happens, is 1, 2, 3. This is equal, this lead is equal to this one, related with this one 85% of the time. After it does 3 wakes, and the market goes 1, 2, and 3, right? So eventually, this low is the 618 of this, the beginning. Same here. 1, 2, 3 equal. 3 wakes back equal. 618 of this one, these 3 related to this is this one. 3 back equal, and then this ending to be equal to this one. That's how it works. That's how computer trades. So that's the sequence of the SecGen. Now, let's try to see if it makes sense, right, AJ, AM? This is what we refer to the code of the market. You remember, Christopher, when we started development of this, right, years ago. So you're going to see that from the peak, which is a super cycle degree, the market did 1, 2, you relay 1 and 2, and that's the reason of this SecGen bounce here. That blue box. It's not 100% science, because the flat happens from time to time, right? And when the flat happens, or the old cycle, or the rooting cycle give up, they can do 4 and 5s. But well, it's at 80% themes. Right here you have 1, 2, that makes your blue box, right? That's the first definition of the first 3 swing blue box area, right? There is no better way, AJ, to learning, to join us. You're going to learn it in a flight with these sessions every day that we do. We do this every day, guys. Now, that was right there. Then you're going to see how I'm going to remove this side and I'm going to put it to the left. So you guys are capable to identify this small bounce here. That bounce should be, remember, in black. 1, 2, 3, black makes 1 blue, 2 blue. Now, right here, there is another 1, 2, and 3 black, which at the end makes a 7, because it makes 1, 2, 3 black. I will. You guys need to be patient. Otherwise, you guys won't understand about the future. So right here, there is a 4 black, right? And every day, 4 plus 3, that it comes here, 4, 5, 6, 7. It makes the 7 over here plus the 3. So technically, remember what I mentioned, 3, 7, and 11, right? You got 1, 2, 3 black, make 1 and 2. And then when you relate the 3 black or the 1 blue with the 2 blue or 4 black, that's when the bounce and the 1, 2 happen. That's the code of the market, guys. Now, why the index, why the SEGEN bounce here? It didn't bounce because anything. It bounced because it was to mean to bounce. Because whoever saw over here take profit here. So this law have to be 1 blue and 2 blue box. And then the market goes and do this. You see, that's what it bounced. Now, eventually, it makes sense, right? Over here, then, the market bounced, right? And then, what do you think is sold over here? Because the point that I'm trying to make is how these sequences rule the market, AJ, Irona, everyone there. Now, it's sold over here in the red too, because again, it reached the other blue box. It's a perfect sequence. The 618 is the fifth swing. Fifth, not the one. The one or the fifth, put it that way. So right here, the market does 1, 2, 3. What level you guys think that is? This is the 618 or the higher degree, right there. Honestly, have you guys ever thought in your life that the market is so technical that a human being can, without a doubt, foresee the reason of every single bounce and every single rally? Honestly, there is nothing wrong to say yes or no. It's pure technical. Then, this is 2000. You never thought about it, right? So, technically, it's very technical. So, the sequence goes, I started again. 1, 2 black makes 1 blue. 2 blue. 1, 2 black makes 7 black, makes 3 blacks from here, 7 black from here, and 3 blue from here. And that makes a 1 red. Then over here, the market, the moment that the market break these lows, I knew that the top in the indices was about to happen. Now, the market does 1, 2, 3 black to the 618 or the 1 red with the 2 red, but also to the equalex over here. And that's what create, and that's why you guys, now some of you followers in social media see the reason behind the thinking. When the S&P drop over here, because you guys need to understand this to know what's happening next. Otherwise, you guys won't be able to understand it. Now, if you go over here, back in 2019, in January, we told the clients to buy the S&P. Right here, let me see. Yeah, you see, right here. We told the clients to buy the S&P. Because let's look what January of 19 looks in the SEGEN. At that stage, the SEGEN was over here, right? Then the S&P rally, and we knew ahead of time that the SEGEN, the moment we knew that with the SEGEN over here, there was no way in this world that the S&P over here is gonna make 3 and lower. So we knew, because in all fairness, Elliott Wave is not enough. And if I get back to the chart, I put 3 and 4 over here. Honestly, no trying to make to discover the Holy Grail. Elliott Wave suggested I will have be able to do this easily. And guess what? I can have say when the market was here that the wave 3 was in place, right? But as a forecaster, using these tools that we use and the correlation between the dynamics and the elements of the market, we knew that with the SEC yen over here, there was no way that the market is going to crash, because we knew that there was a period in which the yen is going to get weak, AJ. And I know that the yen weak means index is higher. I know that when the S&P dip over here, everyone thought that the big correction in the market started. We knew it wasn't. We knew that it's going to break the highs because there was running ahead of the yen. Everyone understand the concept. How will you relay the sequences into the forecast? I haven't talked about Elliott Wave, right? Have you guys noticed that? Other than that, I say that the S&P, I can move the 3 from here to here and things of that nature. Other than that, I haven't talked about the Elliott Wave. Have you noticed that? Because we only use, most of our Elliott Wave is we use Elliott Wave when we develop the sequence based in Elliott Wave. When we understand that the WXY is a 7 swing, that an ABC is a 3 wave. That's how we use Elliott Wave. But you know now the reason, AJ, right? You know the reason now. Right? So I hope you guys all understand. I hope you guys understand where we are. Now, what is next? Now everyone understands what is a sequence, what is a correlation, what are the dynamics, what the blue boxes mean after all. Everyone know, right? All right. Now, where are we? There you go. I'm going to give you now, where are we? So, in other words, the indices now. That's what you guys want to know. Based in Elliott Wave, there is 3 possible counts in Elliott Wave. 3 possible counts. Right? In other words, everybody knows that there are cycles, that there are grand super cycles, cycles, primary, on and on and on. Like I showed you already. And all you guys need to watch this seminar again to understand better the next 20, 30 minutes of presentation. So everybody knows that. Everybody knows that. Right? So there are 3 possible ways in the indices. First, correcting 2009 as a wave 4. And then it will do a wave 5 within the grand super cycle. That's one. In other words, that this decline is a wave 4. Right? Second, correcting 2009, which is the super cycle also, but instead of the wave 4 as a nest. I'm going to explain now what is a nest. And then it's a 1, 2, 1, 2. And third, ending the grand super cycle and put back in 3 or 7 swing. The most bullish is the one in the middle. The one in the middle is the one here. And the one less bullish for now, is the third one. Neither one of 3 is bearish. I want you guys to understand that. They are all bullish sequence. In other words, they are all telling you that this is a buying opportunity. No is selling into a crash. but you need to let the market comes to you. Again, correcting 2009. This is how a 5 weeks looks in Elliott Wave, right here. In Elliott Wave, this is a 5 weeks advance. 1, 2, 3, 4, and 5. Everybody knows that. Based on the first path, we are either right here or entering the C wave, but in a wave 4, based on the first path. What is a nest? This is a nest. 1, 2, 1, 2. That's a nest. Everybody knows a nest, right? So the most bullish or is that it is a nest. The one in the middle, that is a 4, it rally and then put back in 3 way. This is an ABC. Everybody knows that. This is the famous parents of Elliott Wave. 1, 2, 3, 4, 5, ABC. What is the difference between A, B, and C and 1, 2, 3? Any guess? Any guess? You're going to see carrot at the end. You're going to see. I'm not saying that we're correcting the grand super cycle. I'm not saying that. Right? Exactly, Bobby. I asked you guys, what is the difference between ABC and 1, 2, 3? Besides the 5, of course. There is only one answer. No, both are an import sequence. And ABC over here is 1, 2, 3, 4, 5, A, B, 1, 2, 3, 4, 5. A 3 weeks, 1, 2, 3 is 1, 2, 3, 4, 5, put back 1, 2, 3, 4, 5. So they are identical. Have you ever think that? Based in Elliott Wave, they are identical. Only Bobby has answered the right question. Is the extension. Is the extension. Now, if you look at the S&P, this is 0. This is 0, right? The green line here is 0, correct? What do you have? 1, 2, 3, 4, 5. I know that there are charts of the S&P from the people showing charts of the S&P for the 1800. I don't care how they look like. This is 0. Do you guys agree with me? This is 0. That's the 0 line. So whatever started in 1895, I think one day, or 17, because it was those charts combined the different amount of instruments within the S&P 500, right? It was S&P 75 at one moment, I think so. So, but no matter what it is, this is the grand super cycle, correct? From 0 to this peak. Everyone? Thank you, Kahani. Right? Everyone? This is from 0 to the peak. That's the grand super cycle. Now, the difference, like I say, is the extension. So if we go over here, there is 1, 2, and 3. Now, you put the 1 here, you put the 2 here, and you put the 3. If it was an ABC, in our book, extension means when the blue boxes, remember, is from 1 to 1.618 relation 1 and 2 or A and B. So for me, as far as it is within this low and this high, I know it can be corrective. But the moment that it breaks that high, the 1.618, that will mean that the chances that it is an impulse is bigger than the chances that it is an ABC. Do your homework. Figure it out every single impulse in the market. You're going to see the extension. in a wave 3 75% of the time. Sometimes it is extension in wave 1. Sometimes there is extension in wave 5. I even have the chart for you guys so you guys understand the concept. Let me give you guys over here the extensions. Where I have Eric, I have it here someplace. Over here, look. This is the difference. Extension in 1, extension in 3, and extension in 5. But when the market goes and pass the 1.618 or 1 to 3, this is 0, there is a higher percent that is an impulse instead of an ABC, because at the end of the day, like I say, the difference between Bobby, between this and this 2-3 is an extension. What does create the extension? The power for trend, right? So we get back. You need to join us, AG. You keep saying that, I'm joking with you. I'm joking with you. If you want it, it's free, otherwise. But that's the big difference, the extension. And there is extension here because it passed the 1.618, that it was at 31.80. You probably guys hear in social media that we make a biggest issue about a biggest deal about the idea of the 31.83 level in the market, especially in the S&P, right? And eventually, because of that, when it breaks it, that's why we're considering that the path can be a 4 and a 5, because there is extension. One of the reasons. So to put it simple, like I say, there are 3 paths. And I'm going to be zooming in onto my final conclusion. 3 paths. Correcting 2009 in a 4 and a 5. Correcting 2009 in a 1 on the 2. What is the big difference? That it can get a little deeper than the 4 and a 5. Because the same way that we say that if it passed the 1.618, it should be an impulse. The same way we say if it trade below the 3802 or wave 3, it's no longer an impulse. It's an impulse, but it becomes a nest. Those are new rules that we apply. We don't label wave 4 that it goes to the 618 or the wave 3. We don't do that in Elliott Wave forecast. And then the last one is that it ended the grand super cycle, and now it's going to correct from 0 to 33.98. Everyone does understand the 3 viable possibilities, right? Before we start zooming in. But I hope you guys all understand the 3 scenarios. Yes or no? Everyone? Great. Let me drink a little water. I've been talking, guys, since 10 a.m. in the morning. Right? Now, let's start zooming in. Eventually, I hope you guys all understand that base in the S&P, I will talk about the energy sector. It's here. That's one of the things that is very important, Mary. You're going to see it. Because we're going to talk about a lot of instruments now to try to figure it out which one is. And this is what trading is all about. It. You identify the right side. The right side is the long. Don't question. The right side is the long. Now, a trader, a professional trader, analyze like this and I say, a long, how big of the correction I'm going to get with the open mind. Eventually, because the S&P, honestly speaking, based in Elliott Wave, you cannot figure it out. I can do this. And honestly, there is no a single violation of Elliott Wave if I say that the grand super cycle in the S&P ended. 1, 2, listen to me. This is what Elliott Wave only doesn't work. Because it's suggested. Always going to give you the count that you want. Let's say that I want to be the king of the bells. I'm going to be calling the crash that we not ever seen, that we have never seen in the market. All I have to do is move the labels. Don't you agree, Donor? Move the label. 1, 2, 1, 2, 3, 4, 5, 4 and 5. And I have a beautiful 5 weeks from 0 up to here. That's probably what you guys are hearing around the planet now. The super bearish. Right? Everyone? Right? Everyone. But I'm not forecasting using Elliott Wave. I know that I can present that to the clients. And if I told you guys today this, I would be a hero. Because that's what 95% of you guys has in your mind. The super crash. Don't you guys agree? In an honest way. Now, let's keep going. Based on Elliott Wave, I can make the S&P 3 counts without violation on a single rule. Without a single violation of a rule, I can make Elliott Wave right there, the S&P. So the S&P doesn't say anything other than I have to favor this over being completed. Why? Because it passed the 1.618. And usually the wave 3 reach 1.618. Right? And this can be a wave 4. I have to favor this over that is completed. Everyone with me, right? Now, let's start zooming in now. Now it gets interesting. But I hope that now you guys understand what is a sequence, an incomplete sequence, a bullet sequence, a bearish sequence. What are the cycles, grand super cycles? If I didn't explain that, Mary, at the beginning of the seminar, you wouldn't understand it now. Don't you agree? Don't you? Now you got a better understanding of where we're going, right? So we go through the pain. Now let's get the exciting part, right? Now let's go to the good side now, right here, right? Now, let's go here. Let's start running. For example, this is the EBEX, like I say, from Spain, right? This is the EBEX from Spain, right here. Now, the EBEX right here, yeah, you can ask or the question at the end. Now, this is the EBEX from the peak. What do you guys see here? Right? I'm going to explain other things, guys. Don't have many questions. Wait to the end. Most of the questions that you guys now, you're going to answer your question yourself in the next 20 minutes. Then, if there is extra question, you guys ask. This is the EBEX. How many swings do you guys see? You see 5, like Justin is saying. You used to be a member, right? He recalled my name, your name. There you go. So the EBEX has 5 swings. 1, 2, 3, 4, and a 5 here. Now, when you look at the RSI of the EBEX, and this is a monthly chart, you guys see, how many channels do you guys see? You see 1, and now you see this channel, right? Reason why I believe you see the divergence here, and you see divergence in this peak. Reason why I believe that the EBEX did a flat between 2009 and 2015. A flat. Right? So the EBEX overall, it should trade, now it's trading at the 618 or 2009 related to 2015. Right here. It should bounce and most likely should do another leg lower. The EBEX. Now, important. And we're going to be relating everything to the S&P. Right? This is 0, right? This is 0, right there. Which cycle does the EBEX is correcting? Eventually, it's correcting the grand super cycle. Correct? Eventually, it's correcting the grand super cycle. I'm not talking about Elliott Wave, Mark. I'm not talking about Elliott Wave here. Follow me, Mark. Elliott Wave, the wave 3 never can be the shortest. Right? It can never be the shortest. Right? Now, but what I want you guys to concentrate is that there are 2 degrees here. The grand super cycle in blue, and the gray is the super cycle. Right? Everyone with me? Everyone see that, right? 2 degrees. So the EBEX is correcting the grand super cycle, but it's trading within the super cycle. What is the difference between the EBEX and the S&P? Right? That the EBEX never went to break 2007. And it is the only index across the planet that is correcting the grand super cycle in a clear way. The only one. Now, if you overlay the S&P over the EBEX, what do you have? They agreed up to here, and the EBEX, they agreed up to here, and then they trade higher, lower. Only that one went stronger than the other, higher, lower, but they trade the same side. So the EBEX is telling you that there is more chance that the S&P stand and witness than it rally from here. Right? But also the EBEX is telling you that there is no way, almost 10% only, that the S&P is going to correct the grand super cycle, because the EBEX is about to end the super cycle degree here, and it reached the blue box. Right? So the EBEX is favoring path number 1, path number 2. Right? Everyone with me, right? Now, let's keep going. We have here Aussie yen. I'm going to put Aussie yen in top of the EBEX. Right here. You're going to see an identical chart. What does Aussie yen have to do with the index from Spain? Almost nothing, right? Eye openings for some of you guys. So the Aussie yen and the EBEX are trading the same sequence for 2015. The same goes with the SEG yen. I got a very good question by T. You used to be a member, or you are a member, right? Sounds familiar to me. You are, or you were used to be? There you go. That's why you asked that question. Look at the SEG yen, the Aussie yen, and the EBEX. I'm going to ask you guys in a clear state of mind. Do you guys think that the yen is going to be so strong that it's going to make the SEG against the yen to trade below 0? You don't have to go that far. The SEG yen is correcting the grand super cycle. This is 0, right? And this is interesting. This is a concept that we use that we say the market is running out of space. Have you ever heard of that? Unless you are a member. The market is running out of space. Technically, do you guys think that the Aussie yen is gonna trade below that blue line they say with the yen? So the cycle in the yen crosses saying 2007 is about to end. Wait for me, Mary. Wait for me. Wait for me. You're going to understand it at the end. Now, this cycle and this tree is about to end soon. Aussie yen, for example, is just about the ecolex in Aussie yen is not that long ago, that far away, my bad, is a 57 or 52. So it's less than 1,000 points. Aussie yen run 1,000 points in 2 weeks, right? And the EBEX doesn't have to go again to 252, and explain why now, right? But everyone, what we want you guys to understand is that these three are correcting the grand super cycle. Correct? It's clear, the grand super cycle from 0 to 2007, or 2000 right here in some cases, from 0 to 2007. But the S&P, it hasn't even moved to the downside. It's not even nothing. No, that's the big question. Let's say, so the S&P needs to correct that cycle again. Let me finish. Question to the end. So the EBEX, this is monthly. One of the rules that we have is that in a corrective structure, there never should be divergency in a corrective structure. Never. So when you see that it breaks the connector like it did here, first thing that you do, Mary, is to see if there is divergency. If there is divergency, that means that it should extend. If there is no divergency, means that it can, is what we call truncation. We don't call truncations like everybody else. We call just truncations when the market don't reach in the sequence right here, when don't reach, it collects. And it, because sometimes you have, you do right here 1, 2, and 3, and truncate at the 618. Doesn't reach the blue box. The blue boxes are reached 80% of the time, 85% of the time. The 15% that doesn't reach is when it ends at the 618. How do you know if it's going to happen or no? You look at divergency. And if you go to the EBEX, that was your question here, and you downgrade it to the weekly over here, right? You're going to see with the RSI that it raised the complete divergency. So that might be that what this is doing with the 3, with the 4, a 5, with a series of 2 more lows, you can make the case of 1, 2, 1, 2, 3, 4, 5, 4, and 5, and doesn't have to reach 25,000 like you say. You got it now, right? Because already erased divergence. So I hope that that answers your question right there. Like I say, 80, almost 9,000 charges per week, per month. You realize that we have everything this figured out, right? Every question and have an answer. Now, I got a bunch of good questions, guys. I got this one from Karit, that if a wave 2 went to be, that's a good question. He's saying, that's a good question. He's saying that if I don't have an issue, that this took 9 years and this is too fast. That idea support the next, Karit. Support the next. What you're saying. Because usually wave 2 and wave 4, they kind of agreed in time. And if this goes too fast, it can be the next. You know what I mean, Karit? Because this one took 9 years, from 2000 to 2009, right? That can support the next. It's super fast. Usually wave 2 or wave 3, they're super fast. Because usually by nature, wave 2 of a nest is like, because the trend is bullish. Then something happened that think about the nature, Karit. When you see usually the nest, the wave 2 of 3 always is fast. And the market reverse. Right? Yeah. I'm going to give you my conclusion at the end, my friend. Now, we were at the EBEX and relating the EBEX with the Aussie yen and the SEI yen. And then I have to think, the Aussie yen is not that far away from his grand super cycle correction, Ecolex. I cannot be that bearish the indices, guys. But at the same time, I can read and say the yen should have a little more strength on it. But there is already 1, 2, 3, 4, 5, 6. Oh, I'm sorry. 1, 2, 3, 4, 5, 6, and a 7. Clearly there. Everyone with me? Now, so far so good. Now you're learning, right? I told you at the beginning, guys. You guys gonna hear something here that you never hear around the planet. You never heard nobody saying the market's running out of space and it's gonna get better in a humble way. Now, this is the ham saying. Zero line, grand super cycle. How many swing do you see in black? Last time I checked. 1, 2, 3, 4, and 5. It's bullish. Every time that you see a 5 is bullish. Either 5, 3 backs and higher, or corrective and bullish. I'm going to ask you guys, do you guys label from here to here corrected or impulsive? Any guess? From here up to here, corrected or impulsive? Impulsive? How come? That's 3 ways. 3 ways. There is no impulse there. I give you something. And you guys remember in 2008 when the S&P did the flat, right? 1, 2, 3. The reason that the S&P did a flat is because of the ham saying that it reached this Ecolex from 0. I create the flat because everything is related. But now everything is an open space to the outside. It's corrected. Andrew, exactly. T, exactly. But it's 5 swings. And last time I checked, the ham saying is over here. Yes or no? Is over here. 1, 2, 3, 4, 5. 1, 2, 3, 4, 5. It took the highs. Look at what is written here. Ham saying is showing 5 swing from 2008 low. Should see more outside within the grand super cycle. But this is the super cycle. What day is this? 2009. What the ham saying support? And this decline here is corrective. So when you have 5 swings, right? When you have 5 swings, 1, 2, 3, 4, and 5, 2 things happen. 6 and 7, or it does a flat and renew higher, like the S&P did in 2000. 5, then it did 3, and marginal new high, it did the flat. But look what happened yesterday. So the indices are bullish. This is not the end of the world. Whoever is saying that this is the end of the world needs to go to the school of trading, right? It makes sense now, right, Justin? You should get back. You work for Utah. I remember you very well, right? Or Colorado, some of the places that I love, right? I remember you. So technically, the Ham saying is showing a bullet sequence. So I need to push the Ham saying against 2009, right? Now, this is the housing market. Super cycle, the grid in blue, 2009. It hasn't reached the blue box. Again, another instrument with a bullet sequence. What it can be? It can be 2007. Yeah, it can do a flat. But I want you to understand, the S&P cannot be a flat. Wow. Thank you, Justin. Hope you do well in that and you find it. So technically, this is a bullish flat, a bullish sequence also. S&P do the flat in 2009. 2009, yes. So the real estate market, this is a good opportunity to buy. This dip, bear with me that. This is the Nikkei. You are assuming that is coming from here. The Nikkei is one of the few, like the Americans, that they reach, I believe, the equalex. And that's the reason of the selling there. Look, I mean, from zero, it's hard to catch the zero. The reason of the selling is because I guarantee you reach the equalex from here. But it's 3 weeks. There is no way that you can count this is the yearly chart. There is no way that you can count. Now, do you think, honestly, guys, that the Nikkei is going to break this level of 2009? Karit, Mary, Justin, AJ, all you guys there. Hard to see it, right? It should be correcting 2009. Now, look. Let me see. Let me put the quarterly chart to gather the momentum. If you look at it, it never breached the 2007 momentum there. Now you're learning, AJ. But there is not the end of the world, so you buy the dips. So you see this divergence in momentum after 3 weeks, that's a recipe for the next. A good friend of mine, which is a client, but I consider him a good client, so he's a good friend also, tell me that I was crazy in telling this to the world, right? But you see the point that I'm trying to make, right? That's the Nikkei. 3 weeks with divergency. It is not a flat from here, from 2007. Let's keep going. This is the FTSE from UK. And look at this beauty. Look at this beauty. 0. Now, look at the different colors is the Elliott Wave count. 1, 2, 1, 2, 1, 2. And next, you're going to see the break. Then you have, look at here. 1, 2, 1, 2, 1, 2, 3, 4, 3, 5, 4, 5, 3, 4, 5. Now, look at the numbers in black. An import sequence. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, and 13. You guys remember when we talk about the sequences that the impulse always goes 5, 9, 13. There is your FTSE, and then you have 13 at the peak. This is the peak of the S&P. This is a new high that also comes in 5 and black. For me, it's a flat from here against 2009. What is the detour? That the FTSE is correcting the grand super cycle, like the EBEX and the flat stand. But it's the same that the S&P did over here. A marginal new high and declining 5. Because the FTSE did 13, the S&P doesn't have to do 13. Doesn't work like that. But the FTSE, the message is that you have to push it against the 9, and this will get better. This will get better, believe me, in the next few minutes. What the FTSE is telling you right there is that because right there, the FTSE did a new high over here with, and this chart is monitoring, with divergence is telling me is as bullish as it gets. As bullish as it gets. And I know, guys, that I'm going to be reposting this seminar 5, 7 years from now. And that people going to say, huh? 5, 7 years from now. Because I have no doubt that this is a trap, AJ and everyone else. I got no doubt, right, that this is a trap. I believe so. Like it was 2000. The FTSE can do a flat and get up to 4,000. Yes. Yes. Right? I won't give you the exact levels because I have to respect my clients. Right? Because that's the reason that they pay for. Right? But the FTSE is a bullet sequence. A trap is break that everyone think that the world is coming to the end. But there is no decline in the indices. There is no trap. Because everyone becomes extreme bearish when the market drop. That's what I call a trap. Right? Now, let's keep going. So the FTSE, another one with the with the bullet sequence against 2009. Yes, can be a flat from here. I get it. It can do 3. I mean, I see 5. So if it is a flat, it needs to be 3. And then right here, do a flat as a B, 8B, and then 1, 2, 3, 4, 5. And then it's what I call that. It's what we call the devil structure. It is a flat between the flat. Now, this is the index from Australia. Another one with a bullet sequence. Yeah, that bullet tag, we put it on the charts when they have instruments, when they have incomplete sequence. I know what will give me, I know when we should be buying the indices again, honestly speaking. Not yet. It's the only thing that I can tell. I need to honor my clients. I hope you guys understand. I'm giving you a lot in saying that it's a trap. AJ. So the ordinary from Australia is showing 5 swing over here, 5 weeks. 3 at 2009. And the super cycle is showing 5. Hard to make a flat from here. A trap, guys, is because of the speed, of the decline, everyone goes super bearish. Everyone start thinking that the world is coming to the end, and then the market reverse. That's a trap, David, in my vocabulary. You got it? It's a decline that it should extend, but you have to be looking opportunities to buy. Right? Make sense? That you say that nobody believe you, right? So now you find somebody that believe you. Yeah, people believe that it's going to break 60, 66. Right? Now, that's the ordinary from Australia. Now, everyone understand now why the S&P, if you're going to put and you're going to wave the three possibilities here. The less likable, without a doubt, is that it's correcting the grand super cycle because of the yen, because of the FTSE. Because let's look at the FTSE eventually. Let's say that the FTSE is doing a flat right here. It's a flat between the FTSE. And it's going to stand. Listen, if it's a flat between the flat, this is wave 3. Correct? All you have to do is 2 more 4 and 5s. Because then, using critical thinking, you have to say to yourself, using critical thinking, you have to say to yourself, okay, the other way that you can see it, Elliott Waves, why you say, bear with me, is say to me, you say, let's say 3, and then 1, 2, or this structure. You got 5 wakes, and you say 1, 2, 3, 1, 2, 3, 1, 2, 3. That's what I call the devil structure, because it's a flat between the flat. And then it breaks lower. The most bearish the FTSE can go, guys, Mary, is that's that structure, and you ending 1 here, right? You ending 1, then the FTSE will do this. Everyone with me? That's the most bearish. That's the one that makes the S&P correct the grand super cycle. But the yen won't allow that. The yen won't allow that. The yen pairs. Of course, this is a trap because the market is running out of space. And I'm going to explain what it means with that. And then that's going to make your weekend, guys. And I hope to see you guys soon around Elliott Wave forecast as a trial. Honestly, as a trial, I hope to see you soon around EWF. Right? Right? Now, let's keep going. We were here. One second, guys. We were here in the ordinary, and we say that it is another right there. I know that it is another bullet sequence. A bullet sequence is, like I say, when you have something like this. You have A, or 1, 2, and you make a marginal high, like the S&P this over here, and then reverse. That's a bullet sequence. So the ordinary from Australia, the FTSE, the EBEX, the ordinary, the FTSE, the EBEX, and the Nikkei, they are calling the bullish market. Not yet, but they're calling a bullish market. And they are all favoring over here the 1 or the 2% of the S&P correcting grand super cycle. You can give it 10%. A lot needs to happen for that. A lot needs to happen for that. Now, let's zoom in and say which one of the two should be. We are saying 10% on the grand super cycle. Everyone with me, right? Now, 1 and 2, a wave form or a nest? I give you, anyone guess what I mean that the market is running out of time? Anyone trying to figure out that concept? Right? Out of space, out of time is the same. Out of space, my bad. Because what T is saying is that the S&P, I hope you guys understand, the S&P and the Nikkei is the only instrument across the planet that we cover that it reach the blue box from the all-time low. So the S&P needs a fix. That's what you're referring to, right? The S&P the S&P is correcting for sure, is either correcting the grand super cycle to cash and trade in the same degree as over here, for example, the IBEX that for sure is correcting the grand super cycle. That's one fix. The other fix is that the S&P, I'm going to say, is nesting to then ride with the IBEX into the grand super cycle. So the fix is, does the S&P correct the grand super cycle to allow, and then both agreed in the grand super cycle here? Or like my partner say, it was his idea that then the other fix is that the IBEX correct the grand super cycle and start the super cycle here, and the S&P then keep trading within the grand super cycle. You see, that's the fix. One or the other. Don't you guys agree? You guys capable to see it? Because the S&P with that Dow have two super cycle degree, the one onto 2000 and this one. The IBEX is correcting, doesn't have two gray. It have a gray and the correction against the blue, which is this gray. I don't think that the fix, I don't think that the fix, you used to be a member if you say Krias Teos and Kaikos water. I always say that. Tell your friend, Donna, right? I'm finishing in 10 minutes, guys. So if you can hold it to the conclusion, hold it, Donna. So eventually there is a discrepancy because the Nikkei, the S&P, and the Americans reach equal legs within the grand super cycle. The rest of the world, it hasn't. So the fix is either the S&P nest or the S&P correct the grand super cycle. Now, that's when the concept of running out of space comes in place. And I'm going to throw you guys something to throw you guys out of your seat. Right? Is this. This is 2009. 2000. Let's delete completely this data. That data do not exist. It doesn't go all black. That data there do not exist. I wish I can put it in black. Allow me 1 second. Pure dark black. So you guys don't see that data. This is what is going to throw you guys out of your seat. Let me see if I can go dark black. I think that this is the dark I can go. Well, forget about that data. That data doesn't exist. You are in 2009, right here. You are in 2009, right? 2009. What do you, anyone there remember in 2009 that many people were calling the S&P to do from here and ABC to around 200? Who remember that? Many people were calling 200 in the S&P. You remember, Kari? All those that they were calling the market right there into 200, they miss the most simple concept in the market, that the market, it was running right there out of space. I do recall, I told my members, when the S&P to these highs, S&P goes to 2200, because I knew right there that there was no chance. Now, I'm going to ask you, yeah, that's why they call it the most, hey, because everyone wants the crash. I don't know why. I want to ask you, it was the financial crisis, right? In 2000. So I'm going to throw you guys something related to a financial crisis in 2000, right? And I'm going to explain to you guys what does that mean, that the market is running out of space. I'm going to throw right there Bank of America. Now, everyone understand that the S&P easily can do 5, like it did here, 3 bucks and go to 200. It has a space. You see that, Karit? It has a space. Right? It has a space. The S&P got a space. Right? Everyone see it, right? It can do in 2009, and ABC, it wasn't any violation of Elliott Wave, saying that these 5 weeks ended here with the marginal high, and it's going to do ABC. How do we knew over here when it took the highest that it wasn't possible? Because, guys, the market, knowing the S&P, it was okay at that stage. It can do an ABC from here without a doubt. But Bank of America was trading there at $1 and change. Bank of America do not have a space to do another low, because then it goes out of business, and it was too big to fail. You understand? That's what is called running out of space. Because Elliott Wave can give you multiple, Elliott Wave can give you different avenues, Elliott Wave. But these techniques that we use, they're different. They are different. So Bank of America did not have a space to allow the S&P to make another decline like this. And you're going to tell me that it's not the same trade? Because they are identicals. Beautiful, right? Have you ever guys think about this? I don't think so. That was a financial crisis by then. That's what everyone calling to 200 got it wrong, because it didn't show that the market was running out of space. Now today, the market is running out of space again. And why? Remember, we didn't know this, and this is the reason why the market rallied. You can do the same with Citi, with everything related to the financial investment. This crisis is feeling more in the transportation sector, right? Now, This market is running out of space. Let's pretend again, and let's get back to the real market. Right? Now, look at LSE, or the energy sector. Grand super cycle at the blue box already. This is zero. Do you really think that the sector, same with oil, do you think that oil can allow the S&P, do you think that oil can allow the S&P and the same with the LSE to do this? It's going to go below zero. Look at CSK trading at $16, $17 right there, cents the dollar. So LSE do not have a space to allow the S&P to go this, do 7 swing lower. Now LSE oil is Bank of America. No, LSE can trade more lower. I don't deny that. I mean, if you buy in LSE now, it has to be against zero. Is the equal leg was at 27. The moment that we saw about 3 or 4 months ago that LSE took this low and this low right here, I told my clients, LSE is showing you the map. Right? Exactly, David. That's the area. That's the area. More or less. Right? Now, this is Royal Caribbean trading at $23 the share right there. Now, beautiful grand super cycle correction, but it doesn't have a space to allow the S&P over here to do a correction of the grand super cycle. Do you think that's the path of the grand super cycle, David? Mary, do you think that that will support, is support by Royal Caribbean, by all those instruments that I mentioned, that doesn't have a space? So the war is not coming to the end. The war is not coming to the end. Beautiful, right? So this is American Airlines. Yeah, I'm not saying that they cannot trade a little more downside. Right? I'm not saying that I can trade a little more downside. But this is American Airlines. So unless you think that American Airlines, Royal Caribbean, Carnival, they are going to go out of business, I think that the market is running out of space. And I use the critical thinking that I mentioned before, that if you use critical thinking, in 2008, the government didn't allow Citi, AIG, Bank of America going out of business. I don't know when it's going to turn around. Right? Guys, use your brains. This is not about everything. I'm talking about the overall market. American Airlines is an American company. And the message that you guys need to understand is the following: that every single instrument in the planet, it has, if you, in Elliott Wave forecast, we covered 78 instruments. And I know it's going to get testy at one moment because this is not popular. But keep in mind, guys, the popular belief never happened. The contrarians are the one that end in winning. In 2008, 2010, nobody buy a single house in the States. Only the guys that know how to do it. Everyone was afraid to buy because they believe that it's going to keep going lower. Those that buy at that stage, they're rich now. Those that buy in 2007, when everyone wants to buy houses, they got below the water, under the water. It's the same here. I don't see Carnival, Bank of America, Boeing. Boeing is America. American airline is America. They're going to get bailed out one way or the other. But it's not only the stock. It is not only the stocks. It's the yen. Because the yen is telling you the same of those stocks. You see, David? The yen is telling you the same. Because when you overlay the EBEX together with Aussie yen and say yen, it's the same super cycle from 2018. Yes, we cover all these instruments. Look how many indices we do cover here. The only one that reached equalex within the grand super cycle is the Americans. Of course, Rob, I see, that's what I've been saying, that the yen pairs, they are in the final stage of a super cycle from 2014, 2015. When they end the cycles, these stocks and these indices is going to fly. So, out of all these instruments in these indices, only the FTSE and, sorry, the Nikkei and the American has reached equalex within the grand super cycle. The rest, either like they are correcting the grand super cycle. I know when the bottom will be, David. I'll be honest with you. Yeah, we covered a lot of ETF. Right? We cover a lot of ETF. Right? I have an idea. That's what we call the timing. Right? That's what we call the timing. But like I say, and I hope you guys understand it, I'm giving you guys a lot today for free. I would say, if I use my critical thinking, it's very simple. It's hard for me to say American Online go broke and bankrupt. It's hard for me to say that Boeing go out of business. It's hard for me to say that Carnival has been there for 100 years is going out of business. Right? It's going out of business. It's hard for me to say those things. Right? It's hard for me to say that. Hard for me. Like in 2008, there was a lot of banks that they went out of business. A lot of them. But the big one, they had too big to fail. I don't deny that. I don't want to name the name. There is a lot of small small airline, David, in the US, as you know, and in Europe. Some of them, they go out of business. But it's hard for me to see British Airways, American, all these big company that the planes are down now, going out of business, right? And the market is gonna go, the war is gonna smile again, because the war always smile. If we went through World War II and we went higher, World War I and we went higher, financial crisis and we went higher, do you really think that a virus is gonna take us down? If you're gonna apply that concept, no, I'm not optimistic. But the charts are telling me that this is a buy opportunity. This is a buy opportunity, right? This is a buying opportunity because the market is running out of time, out of space. That's the way I see it. Right? So again, but that's another level, David. I'm sorry because, and I hope you guys understand, guys, in a humble way. I'm have a business which is very successful, thank God, and very loyal clients in Elliott Wave Forecast. They know when to buy, and I wish, I know, and if you read between the lines, you can get an idea. All I'm saying, and I'm trying to do with the seminar, is don't get caught in the trap. Yes, the market should stand a bit lower, right? The market can trade a little bit lower, but the next big move, you bet it is in favor of the yen pairs, in favor of the indices. And to locate the turn, silver is a great buy because the dollar is gonna suffer, right? The dollar is gonna suffer in the next dynamic, right? So, guys, I always believe in the good karma, right? Always happen like that, David. Always happen like that. If you look when American Airlines, for example, bottom here, there was a range. You see, it was a range until it breaks. Everything happened like that. If you look at the S&P, it's gonna happen. Keep an eye around those channels. Some people call it like that, a V bottom. Yeah. So honest, you guys, we fool. I'll be honest with you. I don't know if you guys are capable to read it in my voice. I'm for this week, for the last 3 weeks, we had a group of analysts, around 15 of them. And after 15 years, Davey, I started working yesterday at 8 in the morning, New York time. I live in the East Coast. And I finished at midnight. Thank you, David. I give it my heart and soul of this. I wish I can give you guys what it is. I'm not doing this. Every company does advertisement, they don't deny that. If you guys believe that I know something about the market, listen, take the trial. You're going to get the turn. Believe me. Yeah. I mean, what is the trial? Yeah, it's right here. I didn't want to do this, honestly speaking. I really want to do it. They asked me. For the members break, you asked me in my live session on Monday, 10 a.m., and I will be happy to tell you when to buy everything again. Right? So the trial, guys, you visit over here. It's free. It's free over there. It's free. You don't pay anything for 14 days. After 14 days, you say, these people know or they don't know. And you cancel. It's a 14-day free trial. I got a question here. Yeah, we do a lot of sessions. Ameritrade, depends on what you're trading. Ameritrade is pretty good. All these Americans perform, they're pretty good. Right? So if you want to take the trial, it's right here. No, that's another buying opportunity, David. It is another buying opportunity. It's waiting for the dollar. It's waiting for the dollar, my friend. I hope you guys understand that wheat in Europe, that will give me a good European platform to buy stocks, indices. I know the American because I live in the States, Diana. So the way I see it, guys, is I believe in what I do, David. That's the key. I believe. I don't listen to nobody. I hope you understand that. I don't listen to nobody. Diana, you can go here, guys. Any question that you guys know about the market, because this is customer service. It works until 6 p.m. today, right here, then opens tomorrow around 4 or 5 a.m. in the morning, right? Oh my gosh, I cannot keep it out with that many questions. I honestly speaking about David, I still see CSK as an opportunity, and it's like in an honest way, it's like we're human, right? And he was talking about I was calling ExxonMobil lower at that stage, I believe. And CSK, honestly, is waiting for the market, David. Right? CSK is waiting for the market. And the market there is a concept that we use, David, that is called I don't know if you follow us, I guess, in Stock Tweaks in some places. And we usually go and talk about alignment, right? And there was a moment in the past year or so in which the market, yes, ExxonMobil and CSK, they were right. And also the GGC, which is the commodity, how you call it, index, right? But like everything, and after the fact, you're capable to see many things. And now, if you look at the past, eventually, this is CSK that you're referring to. At one moment over here, we were calling here CSK higher. When it took this low, we switch it. Yeah, CSK can go bankrupt. But don't get me wrong. It's like it is in life support. And I tell you why. Because it is in life support now. At this moment, over here, CSK we were calling it higher because it seems like a 5 swings coming here, right? But the moment that CSK took this low, we knew that the next leg of Ecolex is gonna break the lows, something like that. Or right here, my bad. And eventually, this is the 2014, right? And in an honest way, for the moment, eh, when LSE went for the moment with LSE trading about this level over here, we saw the chance at one moment that CSK can hold the 2016 low. Because at the end, after the fact, everything is easy, right? Because at that stage, the S&P, it was entering here a new leg higher, and who knows that the S&P easily could have extended higher. You see what I mean? The video that you're referring, CSK was over here, someplace around here. LSE was holding this low. After the fact, nobody can say that this was no 5 swing higher, right? So it was a possible alignment there. Also, GCC, which is a commodity index that we track, but that's why you are not 100% right? In the market, that's why you need to trade the blue boxes and never open any stock. Never, 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 because nothing is absolute. The most beautiful setup can come out to be bad. That's a fact. So over here, a GCC, which is the commodity index, it have reached the blue box, right? And it still is within the blue box. But now, if you look at here, the energy sector is at the big extreme. The S&P is ready for the rally. Yeah. And also, oil is trading very low. Trading very low, right? So it looks like it can happen now, let's say. But honestly, the moment that we saw everything change in the market, guys, in an honest way, in 2019, it was January the 3rd, when the Aussie yen took this low. At that moment, everything was in life support because the 5 swing lower in the bearish sequence of the yen. That makes a lot of difference, right? So that's who we are, guys. I didn't talk that much Elliott Wave, right? When the sequence are created, all bets are off. And like always, we and Elliott Wave don't pick tops or bottoms, and we always show the more aggressive view, even though there are more than one view sometimes. But the moment that the Aussie yen take this low, that affect oil, that affect everything when this low was taken. Because then there was no chance for yen weakness. It can be a temporary, but that breaks in the yen pairs was a huge hint in the market. And that's why we've been laboring. I don't pretend to say that I'm always right. No, I know and don't. I mean, if you look at Aussie yen here, listen, that's what we were presenting in February. A rally here and a strong decline. The only thing is that it didn't do the rally, but it was bearish, right? Eventually it was bearish. Look at the daily chart. It was bearish. We told the clients to buy Aussie yen here. They went and they free because it react but then give up. But it's a very then, and we knew at that moment that the thing was about to happen. Only this rally, it was have generated this rally. And another thing to finish that I haven't talked was the 10 years note. I don't know if you guys track that. Look, this is the reason. The moment that the 10 years reach over here, we did a blog about it. You probably guys see it everywhere. That we say the moment that it reached here, we knew that the indices, they were about to drop. So now, get ready for the next buy, guys. It will be fascinating. That's all I can say. My last things, what I think it is the next. Right? Yeah, you can trade the index using option, yes. I think it's the next, guys. That's my call. Not the wave 4, not the grand super cycle. For now, the next is the one that fixes everything. All right, guys. So see you guys around again. Yeah, that's the best. That's a good way. You don't risk that much to trade. Like I say, if you guys think that we know something, to be honest with you, take a trial. That's all I can say. Ain't gonna change my life, but at least I know I did some good today. Yeah, they're gonna send the seminar. Yes, right. Take the trial, guys. It's free for 14 days. I don't want to sound like I'm selling. The only reason that I mention is because Davey asked me. Right? That's the reason. So it's free. You can pick right here whatever instrument or group you want. Free for 14 days. Takes the trial, and you're gonna be in the right side more than in the wrong side. I guarantee you that. And you see these live sessions, we do it. We do it every single day. We do these live sessions in London, New York, and about each group. We do this live session. So if you like it, join the trial, guys. Thank you, guys. Or see you guys around. All right. Have a good weekend, everyone. Thank you.